So that's why you get the pre-approval off the get-go. I always like to say it's like you want to prepare and put your Sunday best on. You know what I mean? You want to make yourself as presentable to the bank as possible. So there's not a credit score we want to strive for per se, but when we do the pre-approval, a lot of people are very hesitant to run their credit because they think, oh, if I run my credit, my score is going to drop. You're kind of doing yourself a disservice at this stage in the game, because we might be able to run a credit report and give you simple tips and raise your score, 50 to 100 points. I mean, I've done it with people within 30 to 45 days that they'll scores a jump. So there's not a credit score that we're striving for per se, but obviously we want to make the best presentation to the bank. And if we catch it early enough before they even start looking, by the time they go through this loanopoly, right, and we're ready to actually get going, we may have a better presentation to the bank. I mean, there's different programs. There's FHA, there's VA, there's conventional. So depending on the type of credit score that somebody has may dictate which of those programs we put them in. But there isn't a score per se, but it's very important to work with a professional that's actually looking at everything and kind of guiding you through the process. I always tell people when they're starting to look and they get a pre-approval letter from us, it's just a general guideline. It's not set in stone, right? So the next thing is find the home, a wish list. We kind of do that in the first step as well, because we're going to say, okay, what area are you looking for? Most people hop on the internet and they have kind of like a wish list already, right? So we'll be like, in this area, what do the homes go for? What are the taxes? So we'll generate a pre-approval, but as they're working with a real estate professional such as you, will actually be another tool in the toolbox where we'll constantly be able to have a team working for the client. So to answer the question, there isn't a specific credit score we want because there's different programs, but we like to look at everything and see where we can make it better if we can.
So Bobby, let me ask you this because, I just want to make sure that it's clear to, the viewers. So I understand there's not a specific credit score to strive for. I think we might want to tap in the different types of loans. What's the difference between FHA versus conventional versus the VA loan? Right. And for each of these different loan programs, there is a minimum credit score that you should have though, right? Can you talk about that?
100%. So on an FHA or a VA, we're going to want to try and have at least a 620 FICO score. Okay. On a conventional loan, we want to have probably, I would say, a 680 or better. Okay. But the point that I'm trying to make, and maybe I didn't drive it home, when I was discussing that, I'll give you an example. My cousin called me about 2 months ago, and her husband wanted to purchase a home. She had a couple blips on her credit. She was actually on a credit card with my other cousin, her sister, and she was just an authorized user, and she was paying it late. So I was able to tell her to remove her name off of that card and then make a couple little tweaks with her own credit and get her to where she needed to be. So yes, there kind of is a minimum, like we were saying, we want to try to have a 620 if we're going FHA or a 680 if we're going conventional. But the important part is to not bury your head in the sand and be like, oh, my credit score is no good, I can't buy a home, and to kind of work with somebody and achieve those goals. Okay, I had a client that we just closed actually a few days ago that contacted me a year ago, and although we don't do credit repair per se, I was able to tell her what to do. And she came back and she's like, I think we're ready. Can you rerun my husband's credit? And we did it, and they were ready. So yes, there are certain scores that we want to strive for depending on the products, but we want to try and help everyone that we can. We want to be problem solvers.
Thank you so much for that, Bobby. So, with that, I think that definitely did answer the question. So, at least everyone will now have an idea of what the minimum credit score is. But in other words, just do not be discouraged if your credit score, is not at that amount to qualify for that FHA conventional loan. In fact, your loan officer will be able to, provide to you, a guideline to actually prepare you to be the best that you can be to qualify for a mortgage. So moving right along, let's just say we know exactly how much you qualify for. The next step is finding a home. Oftentimes, we want the most beautiful home with all the bells and whistles, mini mansion, whatever the case may be. But the reality is, our situation may not allow us to purchase that home. So you
Mhm.
don't want to waste your time window shopping, and you don't want to waste the real estate agent's time showing you these homes that you may not be able to afford. So the pre-approval will pretty much just cut out all of that unnecessary time, and we're only going to focus on the homes that you can qualify for. Your wish list definitely should be the things that you would really really like in a house. But let's face it, sometimes 100% we may not get. If we get 100%, then God bless us all. But you want to focus on the things that you need and the things that you would like to have, but it's not necessarily a deal breaker. So the things that you definitely have to have, I definitely want you guys to focus on those, and don't beat yourself up if maybe 85% of the things that you want are in a home, but maybe the next 15% probably wouldn't work out. So what we'll do as a real estate agent, we're going to compile a list of homes that meets the criteria that you would like, and also in the neighborhood that you would like. Okay. You can also take a look at a website called niche.com, where you could actually just take a look at the school ratings. A lot of us, well, most of us, all of us are moms here. And, the types of school that your children go to is really important to you. That website again is niche.com. You could check out the neighborhood ratings. You could check out the school ratings. And if you're not familiar with the neighborhood, this could probably be a really good source for you to go to check out the school ratings. Let's say we go ahead and find a home. You absolutely love it. The next step is for us to place an offer on that home. This is the amount that you wish to pay, for the home. And it is entirely up to the seller of whether or not they are going to accept your offer, they're going to counter the offer, or they're going to reject your offer. This market right now is a seller's market. Inventory is so low to the point where buyers are just willing to pay above and beyond asking price just to get a house. Just to get a house. The interest rates. Talk about interest rate. And I want to tap into that, Mike and Bobby, because there was another question that someone actually have. Let me just pull that up. If the interest rates are actually going to go up or down this year. I know that right now, the mortgage rates right now is at an all-time low. I'm not sure if it actually had dipped up or down. Can you guys just, briefly tap into that?
Sure. Actually, rates have crept up a little bit. They're still super, super low. One thing we always tell people is, when you start out, maybe the interest rate creeps up, but it really doesn't change your payment much. So interest rates are starting to creep up. They were below 2, now they're creeping up and they're like at 3, but still great. I mean, when I first bought my home, it was 6%, right? And I'm sure when Mike bought his, not to age him or anything like that, it was much, much higher. So historically, rates are still great. When you receive a pre-approval letter and you give somebody a payment, even if rates tend to move up, if they go up 1/8% or 1/4%, you're still going to pretty much have that payment. So the important part is to have an understanding of more or less what your payment is and get something within your budget. And although it sounds funny, even if rates creep up a little bit, the payment itself won't change much, where it should make it so that it's not affordable anymore to you. So the important part is finding the right home, like you were saying, that meets your what you want, what your goals are, and understanding more or less what your payment is, and doing the things in the process correctly.
It's
Awesome.
Soraya, it's Mike.
Hey, Mike.
Hey, very succinctly, in response to interest rates were about 3 months ago, like 2.375. And right now, depending on the program that you're going in, whether you're putting down 20% and going conventional or 3.5% and going FHA, the interest rates are between like 2.625 and 2.875, which is still extremely low. With Biden becoming president and with the bond market going up and the bond market influences the interest rates, I've been reading a lot of newspaper editorials about this, that they expect the rate to go to about 3.125. But at this point, it's still in the high twos.
And to be quite honest, guys, I'm telling you right now, these mortgage rates are absolutely amazing, because I even sold a house about a year and a half ago, and I think the rates were probably like 3.75, close to 4%. There are a lot of homeowners right now who are just trying their very best to even refinance so that they could actually, cash in to do some home improvement or even just have a lower mortgage payment. So if your question would be, is it now a really good time to buy? My answer is absolutely.
Yep.
You definitely want to buy and take advantage of this wonderful interest rate.
I agree 100%.
So,
Yep, 100%.
moving right along. Yeah, absolutely. So moving right along, let's say your offer was accepted. Wonderful, because nowadays there are tons of bidding wars and people's offers not getting accepted. But hey, let's just say we were lucky enough and our offer was accepted. At that point in time, we're going to schedule an inspection. An inspection is a vital part of the home buying process, because you want to know what you're getting yourself into and how much it may potentially cost you. And it may cost you something really, really big if you do not do your due diligence. There are some home buyers who say, hey, listen, I'll take it as is, not a big deal. I don't even have to go and get an inspection. Wrong. Because what your eyes may not be able to identify, a really good home inspector will be able to detect certain things that may cost you a lot of money down the long run. Any issues with roofing, plumbing, electrical, lead paint, flood, mold. I mean, the list goes on. Things that you probably would not even think of that will cost you thousands and thousands and thousands of dollars. And if it's a cosmetic issue, not a big deal for you to take down a wall, replace it, paint, whatever the case may be. But the things behind the wall that you cannot see, that's going to cost you an arm and a leg, that inspector will save you the time and the headache if you get a good one, right? So let's say an inspection is performed on the home. Some things actually came back that we are not too happy about. As your real estate professional, I will then renegotiate that price for you, or see if the seller will agree to fix the items and we'll do another reinspection just to make sure everything is great. Or the owner may even provide to you credit so that you're able to use those funds to take care of those items yourself. Maybe you have a personal pay. So once the inspection is done and you're satisfied, let's just say the house was absolutely amazing. Even though it says the application process, the next step is actually the contract. Okay, so the seller's attorney will then issue a contract to your attorney, because you're the buyer, to just make sure that everything, regarding the home, that you're in agreement with everything there. So your buyer's attorney have to make sure there are certain contingencies or protections stipulated in that contract to protect you as the buyer. One in which will be a mortgage contingency. So Mike or Bobby, tell me, why is it important for a home buyer or potential buyer to have that mortgage contingency in their contract?
Mike, you want to take this one?
Yeah, it's imperative, unless you're paying all cash for the house, to have a mortgage contingency in the contract. Because when we pre-approve you, we're going to tell you what you're qualified up until, including the amount of taxes. If you don't have a mortgage contingency in the contract, then you're essentially buying the house all cash. If you do have a mortgage contingency in the contract and are rejected for a mortgage, which we wouldn't let happen because we'll tell you what you can qualify for in the first step of this thing under the pre-approval, then you're in jeopardy of losing your down payment. If you have a mortgage contingency and you can't get the mortgage for that amount, you will not lose your down payment.
Yes. So it's really important that you have a really good attorney and not one who's going to have you sign your life away. You guys ever heard about, you know what, I don't know about buying a house. I'm just signing all these papers. I don't know what I'm getting myself into. But just imagine you purchasing a home for 500K, didn't have a mortgage contingency. And let's just say that, you know, you didn't qualify for, you know, that mortgage and you didn't have that protection in your contract. That $100,000 that you worked so hard for is gone. Okay. So it's really important that it has it. Standard contracts normally have that mortgage contingency, so you wouldn't have to worry about it. And working with someone like us, I guarantee you, you wouldn't have to worry about that from happening. So you go ahead and sign the contract. Everything looks great. It's signed on both sides. We're going to go ahead and send over to Mike and Bobby that contract so they could start the loan application process. So guys, talk to me a little bit more about that process there.
Sure. So at pre-approval, you're going to give us some of your documents, right? But maybe it takes you 2 months, to find a home. You're going to submit again, your updated pay stubs and everything like that. At that point, we're going to have a contract. So we're actually going to be able to enter everything into the computer and actually give you your application, which you have to return to us. And that's going to give us the green light to start working on your mortgage, right? So it kind of leads into the next step here, where we've already signed the contract, we're applying, and we're going to get ready to order an appraisal.
All right, talk to us about an appraisal. What is an appraisal?
So an appraisal is just like we, the word says, it's for the value. So you may have entered a contract and said, I'm going to pay $500,000 for this home, but maybe the home is only worth $400,000, right? So let's say you didn't have a mortgage contingency, right? Well, the seller's going to say, well, I don't care. You agreed to pay $500,000. I don't care what the appraisal says, right? Now you have to pay $500,000 for that home, one way or another, right? If the house is not worth what you're paying for it at that point, then all the numbers can change. Now, sometimes people will pay over and above what something is worth, right? If they really, really want the property for one reason or another, okay? But this is another out for you because it's part of that mortgage contingency, where if you go back to the seller and say, well, your home's only worth $450, and you ask, we agreed to $500, what are we doing with this? If they turn around and say, well, you have to pay $500, you can turn around and say, well, I'm going to ask for a declination letter from the bank because there's not enough collateral, right? The bank is loaning you the mortgage based on the property being worth whatever you're paying for it. So it's very important that we have that appraisal to make sure that we're not overbuying, right?
If I could just add one very quick thing. When we go back to the pre-approval and then you find a home, what we're going to do is we're going to call 4 or 5 appraisers to see what the value of the home is. That doesn't mean that these are the appraisers that are going to do the appraisal, but we want to make certain that we have at least a great chance of getting the appraised value of the home, so that you don't waste 5 or 6 boxes on this chart and then find out that the house is worth much less than you're offering for the house.
Thank you so much, guys, for explaining this process. Okay, looks like somebody's coming in. Let me let them in. Oh, we got them in. Okay, perfect. So you guys know how important it is to, number one, definitely get a home inspection. It will save you the time and the headache. You understand the reason why the bank would order an appraisal. You know the importance of having a mortgage contingency in the contract, which also have a stipulation about the the appraisal as well. These things are critical. Even at this point in time, you have already spent money for an inspection. You have already spent a lot of time, going through this process. So you want to make sure if you're going to meet the finish line, that we are going through all of the necessary steps, making sure that you're not paying more than what the house is absolutely worth, unless you absolutely love it. There are some people who will pay $50,000, $60,000 more just to beat everyone who's putting a bid in on a house. And you know what? That's your prerogative. But most of us don't. So let's say the appraisal comes back short. As a real estate professional, it's going to be our job to be your advocate, right? So we're going to then renegotiate the price. We are going to listen, your house was actually listed for 500K. Yes, we had offered 500K with us thinking that the house would have been worth 500K. However, after we got the appraisal report, it actually shows, in fact, the house is only worth 400,000. So we'd like to now renegotiate our original offer of 500,000 to 400,000. Sellers do not want to hear it, but there are only a few things that could happen. Is either we accept it, pay the difference, either they negotiate it down to the amount that we would like, or we could totally walk away from the deal. And sometimes it could be hard for home buyers, especially if they are emotionally attached to the home. So at that point in time, you want to do a little bit of reflecting to determine whether or not if it's worth you moving forward with that house or not. All right, so let's just say the appraisal actually comes in. Everything looks absolutely amazing. During this time, Bobby and Mike, they're going to be working together with their processor just to make sure that all of your paperwork is up to date. Anytime you have any updated pay stubs, any bank statements, make sure you forward it over to your loan officer or your mortgage broker so that they're able to forward this information over to the underwriting team. If you delay on your end, it will delay the process of closing. So make sure you're doing your part, okay? Do not call the mortgage banker, do not call the mortgage loan officer, and question what the heck is going on with my closing. I need for it to move forward when you haven't done your part. So just make sure you are prepared, okay? They're going to do employment verifications. And I think they do employment verification even more often now because of the situation with COVID. A lot of people are being furloughed. A lot of people are being laid off. A job you had for 18 years, the next day they're saying, sayonara. The bank will even call up until the
day of closing. Yeah.
to make sure that
Sure.
you are still employed. And on top of that, there's any step in this process could stop you from closing on a home. So let's just say that there was a reduction of hours in your employment, that could affect whether or not you'll be able to qualify for the loan. So if it was a reduction of your hours, if there was a reduction in pay because your position is no longer available, the company is downsizing, it can affect you as well. Now, talk to us a little bit more about the underwriting process, Bobby.
So
and the commitment letter.
Okay, so at this point, I'm gonna, Mike and I would give you a list, right? At the application, we kind of know after doing this some amount of years what the underwriter may ask for. Okay, so underwriter is the person making the determination whether your loan is going to get approved or not, and the goal is to get a commitment, which is the next box on our list here. That commitment is your actual approval. Okay, so the commitment letter that the underwriter is hopefully issuing is going to have a list of conditions that are going to get us to the finish line. Okay, that commitment letter is also going to go to your attorney, because your attorney is going to want to order a title report. And a lot of attorneys won't order a title report and cost you money if they don't think, or they don't know that the loan is approved. So this is critical. It's a critical step to get enough documents into the bank where we have the appraisal report and a full file and the file going to an underwriter who can have enough information to make a determination whether or not you're approved or not. Okay, so it's very, very critical that to follow these steps and get everything that we're asking for right off the get, and don't delay the process, because a commitment has to be issued within a certain amount of days, and that'll be in the contract. So if you're not doing your part, like you said, Soraya, that could jeopardize again your down payment and cause a problem in your loan process and your contract.
Oh, yes. And there's a lot of attorneys that have to use the power of persuasion just to get an extension for that. Now, typically, the commitment letter is due within 45 days of the contract signing. So before you know it, those few weeks will go by like nothing.
Yeah.
So you just want to make sure that you're organized in that sense. I'm really good at, you know, reminding Edwin and I, we are very, very hands-on. I personally have worked with Quick Fun and Mike, and he's very hands-on. So we work great as a team on what needs to be done. Communication is key, for us. I think that it's great that if we're working together as a team, with you as a home buyer, and we're transparent throughout the process, your experience in home buying will be a lot smoother than you think it would be. So just piggybacking on the title report, for those who don't know what it is, think about, a birth certificate of a house. Basically, everything that you could possibly think of is in that report. Any open permit issues, any liens for the house, any violations, any additional owners. I mean, you name it. The title report pretty much will figure it all out, because the end goal is, when you're purchasing a home, you would like a clean and clear title. You do not want to grandfather any of those things going into a new home. Could you imagine if the house had a building department violation and you purchased the home from a seller? Do you think it would be right for you to grandfather that issue and having to pay for that? Probably not. Nobody would want to. So the title report will be able to identify those issues. And at that point in time, your attorney will be able to assist with having these things cleared out prior to closing. Just like a automobile that you may purchase, with a home, you're gonna need insurance. You need a homeowner's insurance policy. Your mortgage clause requires you to obtain a homeowner's insurance policy. Some mortgage companies may say, hey, listen, we want the property shown on that homeowner's insurance policy. And the reason why that's important, as you guys could see it, even in today's market, or even back then, the value of homes go up and down. If you actually get a homeowner's insurance policy, just at the value at the time in which you have purchased a home, and let's just say that the value has gone up since then astronomically. If your homeowner's insurance does not indicate a replacement value, and your home burned down or something happened to it, in order to build that home, you may have to come up with the difference. And guess what? You still owe a mortgage on that house. That's something that you're going to be responsible for until you actually pay that last note after 30 years, unless we win the lottery and we just pay off the mortgage right then and there. So once you have checked off everything on your commitment letter, all the items that Bobby and Mike would need, you pretty much kept your job. Everything looks absolutely amazing. And all the conditions have been met. You're now then clear to close. When you're clear to close, your attorney, alongside of everyone else, would come up with a date where everyone is available to close on your home. But before we close your home, we will schedule a final walkthrough. We want to make sure that the house is still there. We want to make sure that the house is still in the condition that it was in when you first seen it and fell in love with it. Short story. And I actually shared this with Liz one time, because I helped Liz and her husband with their home. Another buyer actually saw a house that they fell in love with, and particularly the kitchen is what caught their eye. Stainless steel appliances, nice chef kitchen, stove, microwave, dishwasher, you name it, top of the line appliances. They loved it, with an island. All right. In their offer notification, I specified that the appliances we saw during the open house, and I specified exactly what it was, Samsung, LG, whatever the name of the brand was. I specified it on their offer notification that it is included in the sale. The day of the final walkthrough, we walked into the kitchen. The stainless steel appliances were replaced with white old refrigerators, a used stove. The dishwasher was nowhere to be found. Okay. And there wasn't a microwave. Day of closing, final walkthrough. My buyer was livid. Soraya, how could they do this? What I'm going to do, this is my day. I have to close. And now this is just a disaster. I don't even want the house anymore. I said, hold on.
We're protected.
Don't worry. I got you covered. Well, what are you talking about? We can't close on the house. I said, don't worry about it. We contact the attorney. We took pictures of the appliances at the time of this final walkthrough. We also had pictures of the appliances the day that we actually went for the open house. My buyer was awarded equivalent to what those appliances actually would cost at the time of closing, cash money, because that is what they had agreed to. So during the final walkthrough, exactly how you pictured your house to be, in the condition that it was, as long as it was in writing and it was signed off, you have nothing to worry about. Okay. Don't ever miss a final walkthrough. Okay. So once we do the final walkthrough, we're off to closing. Closing, I would say, take about an hour, hour and a half, depending on, how smooth things go, because things can get a little rocky, depending on whether or not the seller had uphold to the agreement. But for the most part, things run through smoothly. And then you become a homeowner, and congratulations to you. Now you're going to have to just switch over all the utilities into your name. The water automatically goes into your name. You definitely want to apply for the STAR credit, so that you can have a credit at the end of the year on your taxes given back to you. So that's the home buying process. But there's a couple of things that I want you guys to keep in mind. You may not love your job, but while you're actually in the process of purchasing a home, you want to think twice before changing or quitting your job. And Bobby and Mike, do you want to tell them the reason why?
Because going back to what we talked about with mortgage contingencies, right? There's only a certain amount of things that we can control. But if somebody doesn't have a mortgage contingency in their contract, and say they do one of these things that you have here, they quit their job. Now you don't have any income. Guess what? The bank's not going to loan you that loan, right? Changing banks, that could create a nightmare, because now you move money around and we have to source everything. The same thing, the next one, right? Making any large purchases, you're adding more debt. So you're actually, there's a lot of stuff that you will do that you could do to potentially jeopardize your own loan. Okay, because you could change your profile tremendously by making any of these mistakes. They're very self-explanatory. We're not going to go line by line, but I like that you have these common mistakes on there.
Yeah, I mean, we have to have these reminders, because sometimes we do things, unknowingly, not thinking that it's going to hurt us. The common mistake is, hey, I'm buying a house. Let me go and buy a brand new car. Your debt to income ratio is now affected. So now it's going to affect the amount that you may potentially be approved for. And just going back to what Bobby said, source, for those who need a little bit more clarification, we have to be able to source the funds, because with the banks, they're trying to prevent any type of illegal funds or money laundering. They want to make sure that the funds you have in the account, to help you purchase your home, are legit funds. So if someone is someone is actually gifting you funds, that's something a little bit different. Whereas the loan company can provide what we call a gift letter. And the
Right.
gift letter basically says, hey, I, Soraya, I'm going to loan Bobby $20,000. And guess what? He doesn't have to pay back. Right?
Right.
Because
Right.
without the gift letter, it's basically going to be deemed as a loan, an added debt that will have, you know, an adverse effect of your pre-approval. So make sure if you have any deposits coming into your account, source, it's a paycheck. Someone is writing a check and not giving you cash.
Right.
You know, if it's transferred from one account to the next, it has to be sourced, and you have to be able to provide an LOE or a letter of explanation as to where these funds are coming from, why is it happening? I mean, the bank will ask you a whole bunch of questions. Do not give them any reason to further probe anything, because it may delay the process.
Right. And we're not looking to kind of investigate the person, but we have to follow these steps. And a common impulse is, hey, I have mattress money. I'm going to throw it in the bank because I'm buying a home. So don't do anything without speaking to one of us, because we'll be able to better guide you as to what and how to handle any large amounts of cash so that your process goes smoothly.
Awesome, awesome. So
And
there
just
was,
one other thing, Soraya, in conjunction with that, gifts are permissible, as you said, but a lot of people, what they do is they go out and they take out installment loans or loans to use as a down payment, and that's a no-no. You
Right.
can't
Good
borrow
point.
money from a bank or a credit union and use that money as your down payment to purchase a home.
Thank you so much for bringing that up, because, you know, a lot of people do that unknowingly. And that pretty much would adversely affect their pre-approval. It'll affect their debt to income ratio.
Right.
They have no idea at all whatsoever. What most actually would do is whatever savings they have in their account, they'll use that as a down payment. If you have a 401k plan, where you could actually withdraw funds, depending on the retirement plan you have, they may allow you to borrow up to a certain amount of funds or to take out a certain amount of funds.
Right. So the reasoning behind that is because you're borrowing against yourself. So you're borrowing against your own money. So if you were not to pay that back, all they would do is take that money, right? And then you'd pay tax on it as if it was income.
Right?
Somebody asked a question about closing costs. I don't know if we want to address it. I don't know if somebody saw that.
No, I didn't see it. Hold on.
I saw it. It came up as,
Yeah,
is there any
somebody
way
asked
not
is
to
there
pay
a way
closing
to
costs?
avoid closing costs.
Yes.
So closing costs are part of the loan. You can't avoid them per se, but sometimes you can, as part of the negotiation process, have the seller kind of cover part of it. It's called a seller's concession. And Soraya, I'll let you speak on that as well. But basically, you're including part of the closing costs, which is permissible on certain types of loans. And the percentages may change depending on how much you're putting down and the loan type. But it's something that you're including as part of the price. Now, Soraya, you can talk about sales concessions in the market right now, I'm sure, in terms of sales concession. We do still see them, but they're becoming harder and harder to come by. And you can kind of explain that if you can, being that it's more, people battling each other with offers.
Yes, absolutely. You know, seller's concessions for a seller is a nightmare, and I'll tell you the reason why. Great for buyers, not great for sellers. So seller's concessions are mainly used, based on my my experience with the buyers that I have to assist with closing costs.
Soraya, are you there? Let me
I
message her.
Am I here? I am here. Oh, can you hear me? Can anybody hear me?
I hear
I
you.
can hear you.
Oh.
Now we can hear you. Yeah.
Okay, so I'll start back. I'm so sorry. I'm not sure exactly what anyone had heard, but a seller's concession is basically a credit that the seller actually gives back to you. However, it is incorporated in your loan. So most of the time, sellers' concessions are used to assist with closing costs, Or sometimes a seller's concession actually could be used for any other thing. I mean, it could be used to, as additional funds to repair items in a home, whatever it is that you want to use for. But the typical reason why one is needed is to assist with closing costs. Now, it's a nightmare for the sellers because since the seller's concession is incorporated in your loan, if the house does not appraise for the value plus what you are requesting for a seller's concession, it will not go through. It will cause some problems. So, for example, let's say a house is for $480,000, but you actually need assistance of $20,000 to pay towards your closing costs, right? So if we add those two together, that's $500,000. $500,000 will be the actual loan cost. This will be your mortgage cost. But at the closing table, the seller is going to provide that $20,000 for whatever it is that you need. However, remember we talked about earlier the appraisal and how important it is for the value of the house, or even like the loan you're taking out. It has to be that amount. If the appraisal does not come back in at $500,000, that seller's concession goes out the window. And what I have identified a lot lately, because I even try to use it myself for one of my buyers, is in today's market, the seller's concessions with banks, they're not going through at all. They're not going through at all. So what I have done for my buyers, instead of requesting for a seller's concession, I will ask for a credit. So if I'm putting in an offer at $480,000 and my guy needs $20,000, I'm asking for $20,000 back from that 480 in order to pay towards that closing costs. So if you really can pay for your closing costs, then wonderful. But a seller's concession is very rare. Not a lot of sellers actually accept it right now in this market. Does anyone else have any questions regarding that?
I have a comment, if that's okay. Earlier,
Sure.
Mike spoke about if somebody's working with us, and before we even start the process, if we know somebody is looking for a sales concession, it's even more critical that we're calling a couple of appraisers just to make sure that that final price on that contract is worth, again, we can't ensure that that appraiser is going to do the job, but at least if we have 2 or 3 people telling us, yeah, the house is worth 500,000, we know that the deal is going to go through. And maybe we can even go to the seller and say, listen, once we have that contract, we're going to order the appraisal right away. We'll have the results within a week, so that you're not tied up in this contract. Will you please go ahead and sign this contract? And that may entice the seller to go move forward. And you have that knowledge that, hey, we have a pretty good shot at doing this.
Yeah, and the reality is, there are a lot of sellers who want $1 million for their home.
Mhm.
And their house may not be worth that, but because they had put so much money upgrading the bathroom and the kitchens and things of that sort, they assume their house is actually worth a certain amount. But I'll tell you one thing, the seller does not determine how much the house is worth. The market does.
Right.
And the market, increases and decreases over time, which is the reason why it's important to have an appraisal. I like the fact that Quick Fund actually reach out to a number of different appraisers just to make sure that we're not wasting anybody's time. At the end of the day, we want you to become a homeowner. We're not going to do anything to stop you from moving forward to fulfilling your dream of home ownership. That's the goal here. So thank you so much for bringing that up. Someone had a question that was sent saying, should I buy an investment property before I buy a single family home? That's a really good question. I honestly think that it really just depends on your personal situation, to be quite honest. Some individuals may not want to be a landlord, especially around this time with the moratorium being extended, if someone doesn't pay you rent, you can't really kick them out right now until the courts open up in what, June? And you still have a mortgage you have to pay. Let's say your mortgage is $5,000, but you were banking on getting at least $2,500 from that apartment. My advice is, do not put yourself in a situation that you are not prepared to handle yourself. It's great to have an investment property, but if you yourself couldn't handle the overall mortgage costs yourself, I wouldn't get into it, because you have to get into the mindset of risk. It's a risk that you're taking. You want to make sure you have enough savings. You want to make sure that you're doing your due diligence. Now, if it's family and they're helping you out, that's fine. But when you actually have a complete stranger moving into your investment property, you would have to pray that you have an angel tenant to help you pay for that mortgage, because eventually it'll pay for itself and you wouldn't have to pay mortgage eventually as the time goes by. So before deciding on a single home or a multi-family home, I just want you to keep that in mind, because it's not as easy as it looks. But if your situation allows you to, I say go for it. Or if you're not prepared to do that and maybe want to start off with a single family residence and later on upgrade to a multi-family home, I think that's also good as well. But talking about multifamily versus a single family home, only because I know someone would have asked this question. Can you guys answer this, my mortgage guys? Do you think it's easier to qualify for a multifamily home versus a single?
Again, I think it depends. If we're doing it as an investment, it may be harder because you're going to have to put a larger down payment down, right? But in terms of your debt to income ratio, it would be easier because now you have that projected rent coming in and that's offsetting the debt. So again, it really just depends. Depends on the situation. You may need to use less money down if it's your primary residence, right? So just individual profiles, the client to client, will change up the scenarios. So is it easier or harder? Really just depends. Like you said earlier, should somebody buy an investment or primary first?
But if you were saying, Soraya, should they buy a primary one family versus a primary two family? Was that the question?
Well, whether it's primary or not, but I would say primary, because more than likely, I would assume based on this question, they'll be occupying one unit, and
Right.
then the other unit, they'll pretty much rent it out. So they want to know if
Right,
it
so
would be
you
a good
can
idea.
use a percentage of the rental income to help you in qualifying for the mortgage. But it really depends what the price of the property is as to make it whether it's easier to buy a one family or a two family. If you have a one family for 500,000 and a two family for 800,000, that rental unit, the income that we can use from that is not going to be enough to make you qualify for an $800,000 mortgage. If you could qualify for a $500,000 mortgage on a one family residence.
And that's why it's really important, just to keep an open conversation with your loan officer
Right.
and just let them know exactly, what your goals are. And,
Right.
they'll be realistic with you and say, hey, listen, I know you want a house for 800,000, but the bottom line is you're not going to qualify for it
Right.
because the supporting documents that you've provided to us, it doesn't warrant, what
It
you
all
would.
starts, and I don't mean to interrupt, very simple. It all starts with the pre-approval. When you give us the documents that we ask for, we show you all the options that are available to you, tell you what your monthly payment would be on hypothetical numbers in terms of prices of one family, two family investment, tell you how much money you're going to need to put down. And then we would call, if you were interested and you found a house, and we would call the like 3 or 4 appraisers to make sure that the value is there. So that's why the pre-approval is so important.
Okay. And I want to piggyback on Sam's question also to avoid closing costs. as well. No one can really avoid the closing costs. However, there are certain programs that can supplement, to help out with that. So let's just say if you get a loan with Quick Fund, there are some non-for-profit organizations that may help with closing costs or home approvals and things of that sort. And trust me, I have done research on some of them, and you would have to meet a certain criteria in order to qualify for a grant. And some of them you have to meet certain income requirements, and their income requirements, if you ask me, would be something that you could not even survive in New York for, to qualify. So I'm like, is it a co-op you're trying to give us, closing costs for? Because we cannot get a grant on a house in New York, maybe out of state. But some of the income requirements, for like a family of 4 can exceed $60,000. I
Right,
mean,
what
it
are you
was
buying with that?
ridiculous.
Yeah.
Right. You know what I'm talking about, right? I said, this is
Yeah.
ridiculous. We might as well just move to the middle of nowhere, for that.
You're
So there are some,
100% correct.
yeah, I mean,
100%. You would get, you know what? You would get the grant, but you wouldn't get the mortgage
You
because
couldn't
your
find a
income
house.
wouldn't qualify for the mortgage amount.
yeah, because you make way too much money. But you can definitely do some research, on some programs, to assist with that. And even if they were able to assist, with that, I don't know a program that will do 100%. Maybe they'll do a good amount, but there will be some kind of costs of the
Yes.
prepaid items.
Yes. That's correct.
Does anyone have any other questions?
Hi, Saraya, it's Liz here.
Hi,
Very
Liz.
quick question. And I know I'm listening to you guys, super informative, but I just wanted to break it down a little bit more. So it seems like your company is the one that manages getting you that loan approval, getting you the appraisers, and ensuring that everything is essentially done through your organization. Is what I'm trying to ask. So
Yeah.
I don't have to go to a bank because I know the process is essentially, you try to get approved for a loan. So we're not going to the bank, we're going to you guys first, or we're going to the bank to get the loan first?
Oh, so these guys actually represent the bank.
Oh, okay.
They represent the bank. So you know what, Liz, you actually brought up a really good point, because some people feel like they have to go to these humongous commercial banks and sit down with a loan officer to do things. But there's a difference between a mortgage bank versus the commercial. Me personally, I do like working with the mortgage bankers, or even like with a mortgage loan officer, simply because, with a broker, they tend to like shop around and see what the best rate that they could actually get for you with multiple companies. But when you're dealing directly with the mortgage bank, these guys have all the key people that you need to do what you have to do. Their underwriting is in-house. They're not really sourcing it out, to someone on the other side of the United States to take care of things, waiting on answers. You want to deal with a company that will be able to walk you through the mortgage process as smooth as possible. With banks in general, they hire outside contractor appraisals in general anyway to go ahead and assess the value of the home. And nowadays you could just do what you do right over the phone. I mean, we're in the day and age of technology. Just like how we're doing this Zoom call right now, you could consult with your mortgage officer, and they'll be able to, walk you through the entire step right from your fingertips. You could send over your bank statements. A lot of us do banking online. You could send copies of your pay stubs. You could take a picture of it, send it right on over. And these guys will be able to do everything for you. It's a one-stop shop. And that's what we want. We want a nice, smooth process that's not going to frustrate us, that's going to be, effective and efficient. And these guys, they can definitely do that.
Sounds good. No, I just wanted to ask some, people are always asking about the cost. I think what deters people from trying to buy that home is all of the costs that are associated. When I think about cost, I think about the down payment. I think about, yes, I'm going to go to try to get this loan. Now I got to pay that person to try to allocate that loan for me. then I gotta pay the appraiser. Like, I think what that's really the main issue for a lot of people. Like, how many costs are involved and how do we tackle that? Like, even with a lawyer, we have to get a lawyer to ensure that they're communicating the information correctly for us.
Well, as a mortgage banker, you're not paying us $1. We work for the bank. We have to originate the loan. You are going to have to pay for an appraisal, of course, because we can't appraise the property, but you're not paying us to get you the loan. The bank is paying us to be here ready to originate business. You're not paying a realtor just because they're receiving payment as part of the deal, as part of the commission from the seller. So there are costs involved, of course, and it kind of depends on where the property is. And to answer, in terms of down payment and stuff like that, I know sometimes people think, oh, you need to have 20%. That's not the case. FHA is as little as 3.5%. If you're a veteran, you don't have to put any money down. Conventional, you could put down 5%. So there are different ways to finance your loan, and depending on, like we said earlier, where the property is, depends on what the closing costs will be. But it's important that if your goal is to purchase a property, that you kind of come up with an idea of what you want, and then speak to a professional to kind of answer those questions, so you have an idea of what you may need to accomplish those goals.
Got it. All righty. Thanks, guys.
Thank you, thank you, thank you. So you did ask what were some of the things that are incorporated in the closing costs. Of course, the attorney's fees. If you have a home that's about, I believe, $1 million or more, you have the mansion tax, you have the title insurance, the mortgage recording taxes, New York State transfer tax, and then you have there's a whole bunch. There's a laundry list. Yeah, there's a laundry list of things. And depending on the title company that you're with and the attorney, you may be able to negotiate, some of those fees. When it comes down to a down payment, I would have to say, and Liz, you could attest to this too, even if we didn't go where we went. I think it really just depends on how it's presented to the seller and the seller's agent who you would want advocated for you, because I closed on a house in Brooklyn, $1.124 million. It was a 3-family house. And I kid you not, the down payment on contract that we used was only $10,000. I swear to God, I will share it with you guys, minus the person's name. $10,000. Because my guys at the time, they just didn't have the money at all. And then at the time of closing, of course, they paid the remainder balance. But I think it just really depends on the conversation that you have with all the parties involved, and that there is a full understanding. So it gives you some time also as buyers to save up some money, because your closing costs, it can be, depending on the cost of the home, it can be a bit much. So if you're going to purchase a home, just start getting in the mindset of, saving your money, and also having some funds on reserves in the event that a rainy day should take place, an emergency, because as a homeowner, things happen, and you want to make sure that you're prepared to take care of those things. All right. Any other questions? You could type it in the box there, or if you want to send it privately to Liz, and Liz asks a question, that would be great. All righty. So I guess that's it.
I have a question.
Oh, you have a question?
Are you going to distribute everybody's contact information to the group, so that everyone can contact us individually if they have any questions or anything like that?
Hey, Liz, are you there?
Yes, sure. If you guys want me to give everybody your contact, I thought it was just already a question. I apologize. If you want to give me your contact information, I can take it through Zoom privately, or Sarah can provide it to me. I definitely can do that. Not a problem.
Yeah, because I'd like people to be able to look us up. We have great reviews online, so they know that they're dealing with reputable people. and they can see how we work. I mean, we answer the phones, you know, we're here to assist. So maybe Soraya can, or if you want to give me now your email, I can shoot you an email with all my contact information so that, you know, you can kind of send it out to the group.
Sounds good. I'll do that right now.
And let's see here. And you know what? You could even actually type it into the chat box also, because this is a recording. So you
Mhm.
could type it into the chat box, guys, your email address, your contact information, you know, for the group. I know, Liz, you'll be sharing this video to those who weren't in attendance today, and that will be great. Yeah.
Good. Thank you so much again, Saraya. This was super, super helpful. I know I had a great experience with you as well. I really, really enjoyed my time in finding my home with you. And I always had questions. I feel like that's a really big thing. If you're buying a home, ask as many questions as possible. You know, it's super important. No question to me is a dumb question. I'm very serious on that.
Awesome, awesome. Thank you so much, Liz. And I'm so happy that you've had a great experience with me. And we are all happy to have been given an opportunity to speak to the group here today. So as you guys could see, Bobby's information is right there in the chat. Feel free to jot it down. If you have any questions that you wanted to ask him privately that you did not want to ask on the chat, anything that has to do with loans, mortgages, how you could actually improve on your credit to get that score where it needs to be. Feel free to go ahead and contact him by a cell or by email.
All right.
All right, guys. Well,
All
thank you
right.
so much for your
Thank you,
time.
everyone.
Oh, wait, did somebody
Oh.
just said something?
Just a very big thank you. My name is Christy. I'm the one who runs the mom group, and
Hi,
this was a
Christy.
helpful information. I took a lot of notes. You guys covered everything, so no matter where people are in their like home buying process, I think you like covered something for everyone. So I thank you, and I will go online and make like a flyer with your pictures and your email and your numbers, and I'll post it on.
Awesome.
Everyone can have it. Okay.
Fantastic. Thank you so much.
I'm
I
also
want to thank you.
survey.
Thank you very much.
Just seeing how their experience was, and I'll get you, you know, what they felt, any suggestions or any things that they want to send.
Okay. Great.
Great.
All right.
That's
Thanks,
great.
Christy.
Thank you.
Before you guys go, I mean, I know everyone is here, you know, for the information. Is there anyone currently at this present moment, you know, looking to purchase a home even like this year, or they're actually looking for next year in the group? Oh, can't
Sorry.
hear you, Chrissy. There you go.
Yes, so I can't unmute myself. There were some moms. I know one mom was talking to me. She already has her pre-approval. The only thing is she was looking for houses in Connecticut, so she wasn't sure if anyone here could specifically help her. But she's on the board, and she was really excited that when she saw the board, she texted me to the side and was like, I'm on the board. I'm on the first step. So there are moms that are like in different processes of.
Okay.
Right.
only-
I know I'm licensed in the tri-state, so if she wanted to speak to someone else and kind of have somebody work with her through the process, additional party, you know, she can, even though she already got the pre-approval letter, why not get a second opinion and just see, you know, she's not tied to anyone right now. But we do the tri-state area. I do loans in New Jersey, Connecticut, and New York.
Oh,
Okay.
and just so you know, Chrissy, I also have a contact in Connecticut as well. So even though I'm licensed for New York, as realtors, we actually do build relationships with real estate agents in different states. So just let me know if she would like a referral, and if that referral agent covers that area, maybe they could provide some insight and, you know, forward to her some homes that she could actually look at and decide if she wants to physically see them.
Awesome. And Marianne just typed that she's looking for an investment property. So I don't know who, if all of you could help her.
I
Okay.
think we all can, depending on the area and stuff like that. Yeah.
Yeah. So Marianne, why don't you just type in your email address, and Bobby, you could just jot that down, and maybe you
Yeah.
can provide to her some insight on how she
Sure.
could obtain funding for, you know, an investment property and how she could start off with that. And then I'll talk to Marianne a little bit further on,
Mhm.
you know, what's actually out there.
Sure.
Well, thank you guys again. I do have a few people that weren't able to watch it live. So if they have any questions, I'll just send them your way once they see it.
Okay. Awesome. Awesome. All righty. Well, thank you so much for the opportunity, guys. Let this not be the only one. If you could think of any you know, conversation starters regarding real estate or mortgages, just let us know and we'll be prepared to help on the next one.
Absolutely. Thank you guys so much. Have a great night.
Oh, thank you. It
Oh,
was a pleasure and a
you.
privilege. Thank you very much.
You do the
Bye
same.
now.
Thank you. And thank you,
All right,
Marianne. We'll
everybody,
talk
enjoy
to you
your
soon.